Daily averages were NASDAQ best day in a month, possibly in anticipation of the election results. But you need to keep in mind that we don't know who's going to win. You might not have a clear outcome, even if you stay up until 4 in the morning waiting for the votes to be counted. Plus, even if we did know, Wall Street's way too eager to jump to conclusions about which stocks would be better on one candidate or another. More on that later. At a moment like this, where stocks have done pretty darn well, but we have some huge unanswered questions. The first about the election, then about Thursday's Fed decision. You know what? I think it's a good idea to take our subjective opinions out of the equation for the moment, especially when we're dealing with anything political. Instead, we need to fall back on something more quantitative, more empirical. That's why tonight we're going off the charts with the help of Carol Maroda. Now, she's that brilliant technician who runs a trading room at ElliottWaveTrader.net, and whose work you can find on X, formerly Twitter, at Queen of Fibs. About 6 months ago, she went positive on the market. Nice calls, represented by the S&P 500. I love that. So what does Broden see in the market right now? All right, first take a look at this daily chart of the S&P 500 cash index. Broden notes that in the middle of last month, the S&P made a new high that was just beyond one of our major upside targets of 58.19. So if it did, you can see that chart, that nice burst there. For those of you who don't remember, Broden likes to measure the size and duration of past moves. Then she comes up with key levels to watch by running those moves through the prism of what's known as Fibonacci numbers. It's a very important series of ratios that appear everywhere in nature: flower petals, snail shells, pine cones. For some bizarre reason, they're also relevant to the stock market. Look, I have no idea why this style of Fibonacci analysis works, but there is no denying that these ratios show up at key support and resistance levels, and they show up over and over again. This time, the S&P briefly cleared a hurdle that was created by a 127.2% extension of the previous decline from July 16th to August 5th. As Broden sees it, the S&P now hit her minimum upside target of last decline. Keep that word minimum in mind, all right? Last week's high was also important because it came right at the confluence of 6 Fibonacci timing cycles. Don't forget, Broden can do the same analysis with both the y-axis of the chart, price, and the x-axis, which is time. She measures the duration of past swings, then she runs them through the Fibonacci machine to find dates where a stock or index is more likely to change its trajectory. In this case, it has to be at 6 timing cycles that can be due between October 16th and October 18th, right here. Okay. The actual high was on the 17th. Since then, the S&P has rolled over, even if today's action is down about 100 points from its October high. At the same time, Broden likes to watch the 5-day exponential moving average and the 13-day exponential moving average. These two in combination are her favorite buy and sell signals. When the 5-day falls below the 13-day, that means the action is getting uglier. It makes her want to sell. Unfortunately, we got that bearish moving average crossover last week, which tells Broden that this market is now vulnerable to the downside. She thinks it's going to stay vulnerable until the 5-day exponential moving average can jump over the 13-day. That'll go back like that. But, look, it could happen. See, that's kind of edged that way. Now, taking a step back, Broden believes that this chart's actually still bullish. The S&P generally heading in the right direction. But in the short term, the bears may still be in the driver's seat. Although today was actually a pretty good day. That's why she says we need to be watching for both time and price parameters for possible near-term bottom. We also need to watch for signals that yesterday's lows might stick. Now, I want you to take a look at the second version of the daily chart. Right here, you can see that we've got a very heavy confluence of Fibonacci timing cycles coming due this week. This is really important. Between yesterday and Thursday. Right on top of the election, the Fed meeting. 6 of them right on top of each other. As Broden sees it, if we go lower from here, she might want to be a buyer in anticipation of a potential low leading to a reversal back up. In fact, it's very possible that the S&P already made its low yesterday, and today was the first day of the rebound. See, I'm giving you kind of a positive wrap, right? Of course, these timing factors don't tell us anything about price. They don't say there's some level where the S&P is likely to find its footing. They just give us a time window, not price window, to watch. Fortunately, that time window is now. One more caveat. These clusters of Fibonacci timing cycles don't always predict a big reversal. Sometimes nothing happens. That's why Broden says you need to watch this time window for the key signals that might reflect a new trajectory. Hey, that's the time factor. Why don't we get to the price factor? All right, take a look at this chart. This is the third daily chart of the S&P 500 with all the key Fibonacci levels. Don't you love this? Control all these. The key supports levels start at 5683 to 5696. This is support, okay? And that is down about 80 points from where we are closed today. Then there's a lower zone of support from 5599 to 5629. So you can see this is lots of support here, okay? It can bottom there. With the third one at 5540 to 5580. So now you just have this here floor, 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 floor. She says we can find our footing at any one of these levels this week, although Broden stresses that yesterday may well have been the bottom. The low kicked in at exactly the right time and exactly the right level. While we haven't gotten a big buy trigger, the 5-day exponential moving average crossing above the 13. Remember, I said that when that happens is when you're going to know that we're in a good place. We have seen some smaller buy triggers on the 15-minute chart, meaning a chart where each tick represents 15 minutes of trading. And then Broden thinks traders have a reason to be long right now because we're seeing signs that the S&P's found this footing. But she also stresses that the election could send the market into a frenzy, as could the Fed meeting. Even if yesterday's lows doesn't hold, she'd still be waiting for a potential buying opportunity on the way down with all these different timing cycles as a floor. Here's the bottom line. The charts delivered by Carolyn Broden suggest the S&P may already have turned around. And even if today's gains prove fleeting, there's a good chance the index will make a short-term bottom sometime this week. So keep your eyes out for potential buying opportunities like we might get in the high-quality stocks I mentioned at the top of the show, because this could be a very, very volatile few days. I say we take calls, just my predilection. I like to start with Jim in Georgia. Jim.
Jim, booyah.